Every dollar you earn is losing value, slowly but surely. Inflation has crept into every corner of our lives, making it harder to save, invest, and even dream of a secure future. But what if you could turn this financial storm into an opportunity? Don't worry, this isn't a lecture about cutting lattes, though if you're spending $10 on coffee every day, we may need to talk. Stay with me because by the end of this video, you'll know exactly how to outsmart inflation, protect your financial future, and even come out ahead. Inflation is the silent thief of purchasing power. Think of it like this. $1 today buys less than $1 did 5 years ago. Why? Prices for goods and services rise over time. This is largely due to increased demand, supply chain issues, or even the Federal Reserve pumping money into the economy during crises. Inflation doesn't just affect your grocery bill, it can impact your lifestyle. Have you ever noticed how things like streaming subscriptions and gym memberships seem pricier than a few years ago? That's inflation quietly eroding your purchasing power over time. So, what does this mean for you and your everyday money choices? Let's break it down. Savings? Inflation erodes their value if your interest rate isn't keeping up. Debt? It can be a double-edged sword. Fixed-rate debt becomes cheaper to pay off, but variable-rate loans can skyrocket as interest rates rise. Expenses? You've already felt it at the pump, in the grocery store, and probably in your rent. But it's not all bad news. Let's talk about how to fight back. The Federal Reserve, aka the Fed, uses tools like interest rate hikes to control inflation. Think of it as them stepping on the economic brakes. Higher rates make borrowing more expensive, which slows spending, but it also makes saving more rewarding. For example, if you carry credit card debt, you're likely paying higher interest rates now than you were a year ago. On the flip side, high-yield savings accounts are offering rates above 4%, a silver lining for savers. So, what are the best financial moves during inflation? Let's dive in. Smart investors know this. Some assets shine during inflation. Here's what to consider. 1. Gold and precious metals. They've historically been a safe haven during volatile times. 2. Real estate. Property values often outpace inflation, and rental income adjusts with the market. 3. Inflation-protected bonds. These are specifically designed to keep pace with rising prices. Diversifying your portfolio is key. Think of it as spreading your risk across assets that perform differently during economic ups and downs. Not as exciting as crypto, but a lot more stable, right? Consumer spending is slowing, interest rates are climbing, and wage growth isn't keeping up. These trends might feel daunting, but they also signal opportunities, especially for savvy investors. Global supply chain issues and rising energy prices are also influencing costs. For example, fuel inflation doesn't just raise gas prices, it trickles down into shipping, groceries, and even your Amazon orders. Want to future-proof your finances? Let's get practical. 1. Cut unnecessary expenses. Automate your budget to identify areas of overspending. 2. Diversify investments. Don't rely on one asset class, spread your risk. 3. Leverage high-yield savings accounts. Take advantage of rising interest rates to grow your emergency fund. 4. Negotiate your bills. From internet to insurance, call providers to seek better rates or discounts. Inflation doesn't have to define your financial story. With the right moves, you can turn today's challenges into tomorrow's opportunities. But this is just the beginning. To truly master wealth creation, check out our video on wealth creation through the stock market, a beginner's guide. Let's take your financial journey to the next level.